Peter, all of that technology is very, very exciting, but I just go back to the valuation issue, which is I think that investors are trying to grapple with what kind of multiple they should be assigning and how they should be valuing these companies. Tesla obviously has a remarkable valuation that effectively means that it is bigger by market cap. If you were to combine almost all of the current car makers together. The question is, you look at the valuation of your company, you look at the valuation of others. There's a lot more competition in this space. Do you think that investors should be using the valuations of some of the older car company models, the sort of classic companies, the Volkswagens, the General Motors of the world? Should they be looking at a Tesla when they look at you? What do you think is the appropriate way to think about it?
It's a fascinating point you raise. I mean, Tesla's commanding its valuation as future-looking, and also because it is in a preeminent position. It is the preeminent technology company in the EV field. That's why it commands such a high market cap. And there's now going to be two runners in that race. Lucid is going to join as a new force in EV technology. And that puts the US in an incredibly healthy position, having two front-running EV tech companies in Tesla and Lucid. And I think it's the technology that justifies those valuations. It's no longer the commodity valuation, how many cars you build, that determines the value of a company. It's the technology and the future potential of that tech. And our tech has got the future potential to truly mass industrialize electric cars.
Peter, though, how do you think then about General Motors? They're aiming to produce, I'm looking here, by 2035, they want to have 30 new plug-in models arriving, and 30 new plug-in models arriving by 2025, and they plan to make a $35 billion investment.
Well, I really welcome what GM is doing and that commitment, but let's see how successful they are in implementing that. There's no such thing, really, as a market for electric cars. People often say, oh, gosh, that market is being saturated. There's a market for cars. And the more better electric cars that come along, the more the penetration into the car market will be occupied by EVs. And that's why I welcome the competition, particularly Mercedes is coming now with the EQS. And this is great because Lucid Air can be compared at the top table with the manufacturer that invented the car, Mercedes-Benz, with the best offering from Stuttgart. And there's always room at the top. It's mighty crowded down below.
Right. Peter, you've said that you plan to put vehicles into production in the second half of the year. The second half of the year begins next month. So what's it look like right now for you?
Well, we achieved a landmark red letter day last Friday. We started building our quality validation run, production run of cars. We've completed our pre-production run very successfully. And last Friday, June the 18th, the last working day of spring, we commenced our quality validation build at our state-of-the-art factory in Arizona. And there's a big difference here, Andrew. The quality validation build cars are the cars which ultimately we will sell directly to customers once we've got the quality right. And that build is currently underway. This is a big step forward in our mission to industrialize Lucid Air.
You've said that you plan to deliver 577 vehicles this year. You have 10,000 plus reservations. Are you on schedule?
Absolutely. We're bang on schedule. And as soon as the quality is right, we're on schedule to release those cars, what I believe will be the best car in the world, to proud new owners in the second half of this year. We're absolutely on track for that.
And I said 10,000 plus reservations. What do the reservations look like right now?
Over 10,000 and growing. It's very heartening. And we're responding to the uptake and increasing demand for Lucid by accelerating. We're accelerating $350 million of investment, bringing that forward to get better vertical integration in our plant throughout 22 and 23. Right. We're also announcing an additional 6 to 7% overall investment in our plan, in our business plan, between 2021 and 26. And with that money, we'll be able to accelerate the growth of the company, secure and de-risk the risk factors, and also provide greater flexibility in terms of our mix of product. We're going to incorporate an extra 2.7 million square feet into our factory by the end of 2023. I'm very bullish about the future that this secures.